Alrighty, let's jump right in. Ladies and gentlemen, welcome back to the Ryan Train podcast. I got a interesting one for you guys today. It was something that I've been thinking about a lot and look forward to talking to the microphone and all of you about, and that is Bitcoin. Broadly speaking, in the midst of all that, we'll definitely touch upon a lot of different topics, but essentially what I'm going to do here is I'm going to exhaust all the knowledge that I have on Bitcoin, on money, on banks, on store of value, and see what I can do with that. And as interesting, well, not as interesting, as much time and energy I've spent on trying to understand this topic, I have spent a decent amount of time. I've tried to listen to a lot of people on this topic. Not going to cover everything. Definitely going to have some gaps and some, just not be able to speak on things so thoroughly. But the point of this is to exhaust my knowledge on this topic and essentially see where it goes and put this out there for people to consider. I think that's one of the reasons I'm doing this podcast, is to put ideas out there for people to consider, right? Not telling you what to think, not telling you this is right, this is wrong. Just say, hey, this is what I've been looking at. Check it out, think about it, meditate on it, see, how you can incorporate it into your own life. And so that is the focus of today's recording. It could be a long one because I have a whole list of things to get through, but again, so be it. That is the nature of these things. So before I get into it, I just want to start with a couple, I guess you could say, caveats. Because this involves money, because Bitcoin is considered a cryptocurrency, because it is still a new technology that is, to some people, speculative. I just want to provide a disclaimer, a word of caution, caveat, whatever you want to call it, to do your due diligence, right? Again, this is just me. This is me offering my perspective based on all the things that I've done. And I should also mention that I have an outline of the topics that I want to get into, but I don't have extensive notes. Now, again, the purpose of this first one is to just exhaust all the knowledge that I have off the top of my head, to see, one, for myself, where I am in terms of understanding money and Bitcoin and the financial world. But then also, but primarily that, just see what I can riff off. Now, examples and evidence and current events are always relevant in these situations, but I just want to mention that I'm trying to do this off the cuff, and that doesn't mean that I'm just going to speak out of my ass. I'm definitely going to try to speak on things that I have seen that are fact-based to the extent that I can. But again, the point is, because it deals with money, because it deals with speculation, because it deals with investment, I just advise everybody to do your due diligence, research, get second opinions, talk to other people, research more. As the old saying goes, measure twice, cut once. So, with that being said, I would like to start off with my own journey with money, because I think it's a little bit relevant, and it'll be interesting just for me personally to revisit this. And actually, funny enough, it builds on the previous podcast that I recorded. So if you are just tuning into this one, number 8, I believe, is called Memento Mori, and I was talking about some of my struggles in the year 2019. And one of those struggles was that I pretty much got really close to being broke. And being broke, I mean, like, all the funds that I had available to me in my name got really, really close to zero, until before I got to zero, I was able to find some work. So fortunately, I was able to bring myself back up. But from that point on, I had a decent job with a decent pay. It was nothing special or great by any means, but it was decent. And so I started taking my financials very seriously. It wasn't that I was not before, but when you have a crisis like that, it really shifts your mindset. And a lot of the conversations I was having with my close friends at the time, again, this is 2019, were about these kind of things. Like, I have a friend, one of my best friends, shout out to Tayshawn. He takes his money very seriously and is always on top of it and has all these systems to keep track and make sure he's working towards certain goals and that his bases are covered. And, he's just being smart with his money, essentially allocating it to the right places, building emergency funds, all these kind of things, right? And so him and I were having these conversations among other friends. And it was in 2020 when I reached out to, let's say, a mentor that I had access to, somebody that kind of served as a mentor to me and a lot of my friends at UCLA. He's a tax attorney, essentially, so I was kind of asking some questions on my taxes, right? Like, should I do this, blah, blah, blah. It was nothing crazy, but just seeking guidance, essentially. And in this conversation, he actually, probed me a little bit and asked me, what are my goals? And he actually gave me 2 suggestions, immediate, action steps that I was able to take, shortly after that phone call. One of them being opening up a Roth IRA. And essentially, for those that are not familiar, a basic explanation of a Roth IRA is a retirement account, and it's a tax-free retirement account, at least tax-free when you take it out ultimately, because you're putting money into that has already been taxed. So it's essentially your take-home pay. And the benefits to that, again, are being tax-free. I think you can use it after 5 years. You can use it towards a big purchase. So, for example, if you're about to purchase a home, I'm sure you could use it towards that. And I'll leave it at that. So he encouraged me to open up a Roth IRA, which I did, and then he encouraged me to purchase this book. The title of the book is actually a little bit cliche, but it's called I Will Teach You to Be Rich. And I'm just going to look up the author. I will teach you to be rich. I might butcher the name, but his name is Ramit Sethi. Again, the book is called I Will Teach You to Be Rich. Again, sounds kind of cliche, kind of cheesy, but for me at the time was actually very educational. One of those books that just gets straight to the punch. And I remember the biggest takeaways for me, again, was, let's see. If you want to take your money seriously, it can be a little bit daunting, but it's all about taking small steps in the direction of being serious about your money. And I think for a lot of people, because it can be so daunting, understanding the financial markets, understanding bonds, stocks, this app, that app, Roth IRA, all these kind of different terms and areas to navigate can be a little bit daunting, so people just tend to stick with what they know. And so for this book, that was kind of the biggest message, just start with what you can, and then slowly stack up, right? In the money sense, but then also in the knowledge sense too, right? And I think the first thing this book advocated for was to build an emergency fund. And I think if you talk to any money person, they're probably going to mention something like an emergency fund. And so that, just to touch upon it, is essentially 3 to 6 months, maybe more depending on your needs and depending on your family circumstances. But that is essentially 3 to 6 months of your monthly expenditures, right? So in case something unfortunate or unforeseen were to happen, at the very least, you're covered for the next 3 to 6 months comfortably, right? And then the next thing, if I remember correctly, is probably something like paying off all your consumer debts. So like credit card, I can't think of anything else, maybe like a car payment, things with high interest, essentially. Like you really want to pay those things down. And then after that, you probably got something like sign up for high interest savings accounts, right? So you have your traditional accounts that pay, most people understand, probably very little. It's up a little bit now because the interest rates have been going up as of recent. I'm recording this as of February 6th. But for the most part, you still don't really get that much bang for your buck by saving in a traditional savings account. So you want to look for the ones that are high yield, right? So at least you're getting a little bit more than your normal. Still not that much, but at the least you're doing a little bit something better than the average person, let's say. So that's a simple change that you can look up. Capital One is the one that I use. And, again, you can look this up. Just search high yield savings accounts and see what's out there, essentially. And then there's probably more stuff that I'm missing, but once you've got all those bases covered, then you can start getting into the stocks and the bonds and the that kind of space, right? Which is, for most people, a whole another piece in itself, right? But even to touch upon that quickly, right? So for stocks, there's so many different options, so many different things to look at with that. But I think the book encouraged people to kind of stick with the basics first, at least. So you have two options among many others that are pretty easy to understand. Number one, you can invest in what are called mutual funds or ETFs. And these are essentially a basket of companies that this is essentially a basket of companies that you can invest in, right? So as opposed to picking an individual stock, right? For example, Apple, Tesla, Google, Amazon, some of the more well-known ones, you pick a sector, right? Or you pick a company size, right? You could pick technology, you could pick commodities, you could pick healthcare, you could pick telecommunications, you could pick consumer goods, blah, blah, blah. So think of it as like a basket of goods, and the pros to that is you aren't putting all your eggs into one company, you're putting your eggs into the industry, right? So your risk is a little bit less, but as with everything, you have trade-offs. Because the risk is less, the potential for gains is a little bit less as well. You're still going to see gains, but just not as, the upside is not as high as if you picked a winner and that goes up like 20, 30, 40, 50%, maybe even higher. And so I already touched upon it, but the other option is to pick an individual stock and say, I'm going to invest X amount of dollars into something like Apple or Amazon. So those are the two basic options that people can think of, and essentially that's what I got from this book. And the book encouraged you, like, hey, if you're interested, check out the ETFs or mutual funds first, and then if you're feeling really savvy and you want to do the research, read the financial statements, things like that, and you understand the company and the products and services they provide, and you understand who's running the companies, then you can pick individual stocks, right? Like that's something that could work. And so I'm reading this book, and from that point on, I pretty much start to get into all of these things, right? So I opened up a Roth IRA, put a little bit of money into there. So my investing app is Robinhood primarily. I also use Fidelity, but not so much. So I get back on there, put a little bit of money from each month into investing and kind of get back into the game. And so since then, this is 2019, I've been pretty serious about my money, not only saving, trying to build, the emergency funds, the sub funds, but also pretty actively investing, like trying to figure out, okay, where am I going to allocate this spare money that I have? And yeah, that is essentially my journey with money. And again, like I said, that's kind of the approach that I take to this day. I still have funds that I actively manage, let's say. I think that's probably how people in the finance world would say. It's not much by any means, but you know, I am the manager of my money, which is kind of cool. I don't have a financial advisor. I get a lot of information from the outside world, but you know, I make my own choices and I have to live with them. So the reason I brought this up, just to give a little bit of context on how I view money and, you know, what it's like in my personal life. And the next thing that I'll get into is how I actually came across Bitcoin and what it's been like going down that rabbit hole. Because again, Bitcoin is a primary topic here. So I first come across Bitcoin in the cryptocurrency space in 2017. And I remember it because it's pretty funny. I downloaded the app Coinbase on my computer at the time and probably had like $400 or $500 just to mess around with. Put a little bit into, not Bitcoin, actually. I put some into the other ones. So I put a little bit into Ethereum, put a little bit into Litecoin, I want to say it was. Because it was like, Litecoin at the time was probably top 5, top 10, if I remember correctly. And at this time, I have no clue what's going on. I have no clue what cryptocurrencies are. Again, I am fairly familiar with stocks, but, you know, very little knowledge even of that at the time. So I'm just hopping on the bandwagon essentially. And I think 2017, this is probably 2017 when there was a big spike. I think Bitcoin went up to like 17, 18K. And then after that, in the winter, I'm pretty sure like December, everything went tumbling down. And then, yeah, in combination with that and needing the funds, I got out, right? So didn't last very long. And I actually don't remember exactly how I got back into it, to be honest. I probably heard it mentioned somewhere in a podcast, but I do remember when I started buying it again. So it was essentially the end of 2020, near the end of 2020, like October, November, December. I don't remember how I heard it, but I did remember it being mentioned in the podcast. And so I decided to take a look, like, hey, what's going on with the cryptocurrency space? And at that time, Bitcoin was probably somewhere around $9,000, $8,000 per coin. And so I was like, all right, let me hop back in this. So I'm buying a little bit at a time. In investing, there's this term known as dollar cost averaging. So instead of, let's say if I have $1,000, I'm not going to buy $1,000 all at once. Instead, I am going to buy $200 at a time once a week, right? So I'm spreading out my transactions over the next 5 weeks. And the reason for that is to kind of average out your price in response to the volatility, right? So instead of, let's say I buy Bitcoin at $10,000, $1,000 worth of it, then it drops to $8,000 the next week, I'm not as shaken up, right? So yeah, that's essentially the idea with it. So whatever money you have, it is, you know, maybe advised, reasonable to purchase a little bit at a time. Again, the term is dollar cost averaging. So the end of 2020, I'm buying back into Bitcoin. And if people paid attention at all, 2021 was a year of astronomical growth for pretty much all the financial markets. Like almost all the stocks went up. Bitcoin went up to like, I think its highest at one point was like 69,000. And then If you paid attention in 2022, everything went crashing down for all kinds of reasons. You got inflation, you got recession, you got the woes of the pandemic, you got that was essentially it. You had a lot of companies that were overvalued. You got a lot of companies that were just speculation, right? Like, we think this company is going to be a big hit, so they had I think the way to describe it is they had that priced into their stock. So a lot of people thought, like, oh yeah, this company is going to be a big hit, so let's put a lot of money into it, inflating the asset or the stock price, only to come to find out that this company is not generating revenue, or barely generating revenue, or not going to do as well, or behind on the product that they're promised, for all kinds of reasons, right? So essentially in 2022 is when things came crashing down, back to reality for a lot of assets, a lot of companies, all that kind of stuff. And so yeah, that's how I got back into Bitcoin. But still, even at this time, I wasn't aware, let's say. I wasn't aware of what the technology was, what I was investing in. It was really just, Bitcoin is at a reasonable price. It's around 8,000, 9,000. I think if I buy a little bit now, it's probably going to go back up. And that's the idea, right? With most, let's say, retail average investors. Like, I want to buy this stock because I think it has a lot of upside over the next year, 2 years, 3 years, 5 years, whatever your time horizon is. So that was the idea for me. Again, being an active money manager, I wanted to put my money into something that I thought had some upside, and Bitcoin was one of the things I had in my portfolio, among other things. Now, the interesting thing is, again, I don't remember exactly how I come across all these people. The only thing that I can think of is through the Lex Fridman podcast, but 3 names that immediately come to mind, among a few others, but I can't recall their names. You got this guy named Michael Saylor, who was previously the CEO of MicroStrategy, now is like a chairman of the board, something like that, and his focus is entirely on Bitcoin. The company's strategy on Bitcoin in particular, but then also kind of being like an advocate for Bitcoin. And I know that sounds that can be a little bit sus, let's say, but I'll get into that in a little bit. And then you've got Saifdean Ammous. He is, how would you describe him? He is a self-described anarchist, an Austrian economist. I think his degree is in physics. I want to say, let me check this out because I'm curious. So he's an economist, and this guy we don't need to know his educational background. So he's a professor of economics, right? But I think his one of his degrees is in physics. But this guy wrote 3 pretty well-known books. One of them being the Bitcoin Standard, one of them being the Fiat Standard, and then the other one being the Principles of Economics, right? And the interesting thing about this guy is he is a student of Austrian economics, which is there's a stark contrast between Austrian economics and the conventional economics in, let's say, the United States, because I don't know where else this idea is applied, probably in most other places, because the United States is what's the word? It's a leader, right? It's the trendsetter. That's the one I was looking for. Trendsetter for a lot of things, right? Not everything, of course, but a lot of things in our world. And that is Keynesian economics, right? This idea that one of their basic ideas is that an inflation rate of like 2 or 3% per year is good for the economy, because if there was no inflation, then people would stop spending, and that would send the economy to a stop, right? People would stop transacting and the economy would crash. I think that's probably a very basic, very rudimentary, but that's probably how the Austrian economists would view Keynesian economics. And Keynesian economics is taught in the universities. It's the foundation with which a lot of people in governments, in the Federal Reserve, and again academics in Wall Street probably base their view of money and their view of the world on. And the Austrian economics are more of a first principles thinker, and they're thinking about, well, what is money exactly? What do people do with money? Why do people need money? And so on. And the last person that I learned quite a bit from is Robert Breedlove. Now, this guy, I don't know too much about him, but I know he's an ex-Wall Street guy, ex-tax attorney, so has seen both sides essentially. He's somebody that comes from the conventional world, let's say, and once he went down the Bitcoin rabbit hole in combination of going down the Bitcoin rabbit hole and seeing all the flaws and the sort of greed and manipulation and harm that our traditional financial institutions and people have been doing on the world, has kind of hopped on the Bitcoin bandwagon, or another way of putting it for the Bitcoiners out there, has taken the orange pill. Essentially, it's kind of similar to the idea with the red pill. It's like the red pill is when you've consumed or been exposed to information, it changes your worldview, essentially. You can't go back to the way that you saw the world before. And the Bitcoin thing is very similar. Once you've gone down the Bitcoin rabbit hole, honestly, sincerely, genuinely, with an open mind, it's really hard to see the traditional financial system in the same light. And so I think that's those are the three primary people that I've learned a lot from, in addition to many others. CoffeeZilla was another one that has come up quite often. But all three of those guys, Michael Saylor, Robert Breedlove, and Saifdean Ammous, can look them up, right? They've done plenty of interviews. They all have their own podcasts. Well, not Michael Saylor, but he's done plenty of interviews that you can sit down and listen to and learn a lot from. And the cool thing about all of them is that they talk about money and Bitcoin from first principles. And essentially, first principles is thinking about things from the very beginning, without preconceived notions, without constraints, without without considering what other people have told you. And so let me just read a couple things. I looked it up. A first principle is a foundational proposition or assumption that stands alone. We cannot deduce first principles from any other proposition or assumption. Here's a quote from Aristotle. It says, in every systematic inquiry where there are first principles or causes or elements, knowledge and science result from acquiring knowledge of these. For we think we know something just in case we acquire knowledge of the primary causes, the primary first principles, all the way to the elements. Here's maybe better. Reasoning by first principles removes the impurity of assumptions and conventions. Again, so what people assume is the right thing, and conventions being what people have thought for most of it, right? What remains is the essentials. And it's one of the best mental models you can use to improve your thinking, because the essentials allows you to see where reasoning by analogy might lead you astray. It's one of the best ways to learn to think for yourself, unlock your creative potential, and move from linear to non-linear results. Again, so all these guys are thinking about money and investment and savings from first principles, right? Not from the convention. And so, yeah, that's essentially my journey with Bitcoin. I'm listening to all these guys and I'm going down the rabbit hole with them, and I'm learning a shit ton, which is essentially what I'll get into today. And so I just wanted to share that as context for anybody that might be interested in learning more. And so the first question to consider is, what is money? And money, money is something that we all know and understand. It's something that we use every day. We work, we spend our time in exchange for money from our jobs or whatever our jobs are, and we use it on goods and services, right? Our home, our clothes, food, blah, blah, blah. The list goes on and on and on, right? But the technical aspects of money are something that we don't really dive into too much, but that's what I'm going to try to do here today. And so essentially my understanding is money has three functions. The first being money is a store of value, right? So if I work and I earn $100 for the day and I don't do anything with that money, 10 days from now, a week from now, a month from now, I will still have $100 that I can use to spend on a variety of goods, right? Now, there are other things that could serve as money, such as an example that I have here is something like corn, right? Now, I would have to exchange this corn for something else, right? If I want to go get some clothes with this corn, I could. Maybe the person that I'm transacting with would like some corn, but the problem with corn is that it is not good over time, right? If I just grew a whole bunch of corn, it's only going to last so long before the corn gets bad. So not the best store of value, right? I need something that is a little bit more durable, and I'll actually get into that in a second. Second thing is that money is a unit of account, and so you can think of it as essentially measurement in the economic space, in transactions, right? We know that a t-shirt generally costs $15 to $20 to $30. We know that computers and phones cost anywhere up for $500 to $1,000, maybe a little bit more. And so money helps us determine the value of certain things. And then the last function of money is that money is a medium of exchange. So kind of building on the corn example, if I have a whole bunch of corn that I just farmed, I could go out into the world and use this to transact with other people, but the problem with that is not everybody's going to want corn. And so if I need clothes, the person that makes and sells clothes may not want my corn. So it's better for me to have some kind of money, some form of money, where anybody would like to hold on to that money and can use that money for their own purposes, right? In the context of the United States, we understand that to be the dollars. If you go back 1,000 years, it's probably some gold and silver and bronze coins. Whatever the case, it's something that people can take and use somewhere else, and that it is widely accepted as a method of payment. Again, corn might work for somebody, but it's obviously not going to work for everybody. Now, there are 5 characteristics of money that are really interesting and relevant to get into. And so I'll just list them off real quick. One of them being durability, portability, divisibility, uniformity, limited supply, and acceptability. So that's actually 6 that I just listed there. But let's go through these and see what they mean. So durability, again, taking the example of corn, or let's say I take the example of a cow or an animal, right? Now, I could take the corn or I could take the cow, and, if I have those things, I do have an asset. Let's say I could go and sell either of those things in exchange for some value, right? But the problem is, again, the corn rots and the animals get, old and sick or injured, or worst case, they can die before I'm able to exchange them for their value, their economic value. Versus if I have something like a $20 bill and I keep it in pristine condition over the next 10, 5, 15 years, blah, 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 it's still going to be the same $20 bill that I can use to transact, right? So that's something to consider. Durability, right? Does it last over time, right? Do I have to worry about it breaking even? Like something like a different example from the corn and the animals is something like a painting, right? Famous paintings run millions, tens of millions of dollars. But the problem with that is, well, they break or they get dirty or whatever. There's a crack in the frame, blah, blah, blah. So there's a durability component to money. The second thing is portability, right? I need to be able to transport my money in an efficient manner, right? And taking the animal, for example, like moving an animal is going to be pretty hard. And even something like gold is actually, there can be some complications with portability, right? Like, I'll get into this in a little bit, but throughout human history, at least I'll get into it more. Throughout human history, gold has been seen as something valuable to hold. It's a sign of wealth. It is the most valuable precious metal. But the problem with that is, well, if you have a decent amount of it, it's a little bit hard to walk around with gold bricks, right? So you kind of need somewhere, like you don't want to hold too much at once because it's not sustainable to hold that much gold at once if you have that much. And so there's a portability component to it, right? If I have, dollar bills are a lot easier because I could have a stack of hundreds and that it's probably something like 10,000, 20,000, blah, 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 something like that, right? There is the divisibility aspect of it, right? So in the dollar, or at least in the US dollar, we have a whole bunch of bills that we can transact with. So we can break the bills down to 100, 50, 20, 10, 5, 1, even 2s. And then we can go down lower than that. We can go to quarters, pennies, nickels, dimes, and the 50 cent or the gold dollars, right? So that's another thing. The limited supply part, this is where Bitcoin actually comes into play in a large way, which is in order for something to maintain value, there has to be a limited supply, right? And how can I think of this? Like in all the countries, in all the situations where hyperinflation has occurred rather, it's been a situation where money has been printed egregiously, let's say. So example in Venezuela, right? If you haven't, look it up. Like people are paying for all their goods and services with like barrels of cash. Now I know that's an exaggeration. I'm about to excuse me. Woo, excuse me. To pay for normal things like bread or food, blah blah blah, people are paying with wads of cash, right? And the same thing occurred in the Weimar Republic. I think it's pronounced like a V. Oh, I'm about to sneeze again. Excuse me. Sorry if that hurt your ears. So, in pre-World War II Germany, there was hyperinflation, right? So I remember my AP US history teacher talking about it, and he kind of exaggerated, a little bit hyperbolic, but it gets the point across. People would pay for bread and food and normal things with barrels of cash, right? Because the currency was printed so much, it was so devalued, let's say, that it took that to cover your bases. So for something to be valuable, there has to be a limited supply. And again, or actually not again, a couple other examples that we can think of is gold, right? Like gold is one of the hardest things to mine, let's say, and to produce, let's say. And people are still mining gold, so the total supply of gold actually increases by like 1 or 2% per year, but that is fairly limited, and so gold is able to maintain its value versus something, I don't know if this is actually true, but I've heard it used as an example quite often, something like copper. Something like copper is pretty easy to make, so you can really increase the supply of copper, and so therefore the value of it is not as high, let's say. Another example, I brought it up previously, is paintings, famous paintings, old paintings. And because there's only one Mona Lisa that's been made, right, the original, or the original whatever painting, these things are very valuable. And I'm trying to think of another thing that is limited. Trading cards. There you go. So trading cards and anything similar to trading cards, I would imagine, have a lot of value because, one, they're very limited. Like maybe they only made 100 LeBron James rookie cards. And so if you have one of those, you have access to a lot of value. Another thing, it just came to mind, is like shoes, right? Jordans, or even other stuff like the Yeezys or whatever, blah, blah, blah. If you have one of the original Jordans, right, you probably have something that is deemed as valuable, versus if the Jordans are just made anywhere and you could buy them any place, you're not going to have as much value. And so the reason I bring this up, again, just to recap, money has these characteristics. So durability, right? It has to last the test of time. It has to be, it can't rot, it can't break down. It has to be portable, right? I have to be able to move it with efficiency. I can't drag a barrel of cash. I can't move my cow or my bushel of corn. It has to be divisible, right? I have to be able to break it down into smaller parts so that I can transact, right? I can't, here's the interesting thing about divisibility. If I have a brick of gold, it's going to be pretty hard to transact because I can't just break the brick of gold down, right? So in that sense, dollar bills or paper bills are a lot easier to break down, let's say. Uniformity, that's one that I didn't mention, but uniformity. Limited supply. Again, I kind of just rambled on that one. And then the last one that I didn't mention is acceptability. So again, people have to be willing to accept this, whatever it is, as a form of payment, right? It has to be, the other person has to see it as something that's valuable, that's something that they want to hold on to, blah, blah, blah. And the three functions of money include store value, unit of account, and medium of exchange. Okay? And so just wanted to give people a little bit of background on what money is, because again, it's something that we don't really think about too often, and it's something that's worth considering, right? And I think the reason I brought this up is because most people, maybe not as much anymore, but most people have faith in the US dollar. They have faith in the United States as a country, as an institution, as a world leader. Maybe not, depending on who you ask, right? Some people are highly critical of the United States, but most people are like, yeah, it's good. I think if you ask most people in the world, they would say a very similar thing, right? Like, oh yeah, ideally I would want to be rich in dollars, right? Instead of like an Argentinian peso, for example. I'm not picking on Argentina, it's just the first thing that came to mind. But most people have faith in the dollar, and most people have faith in the United States that it'll go on, that the future will be, even though we have a rocky situation right now, I think the future will be pretty good. And I'm going to pause here just to do something real quick. Ready? Here we go. We're back. Yeah, I just had to blow my nose real quick. But anyways, I was mentioning before I took a quick pause that I had just finished wrapping up on what is money. And I was mentioning how most people have faith in the dollar and, hold dollars. And most of us in the United States probably have dollars. And I think this all sounds obvious, but when you really think about it, it is interesting, right? Like, we all have faith that our dollars are valuable and will continue to hold value over time. Now, again, depending on who you ask, that response might be a little bit different. And especially now where the financial space, the economy has just been a roller coaster, let's say. And so I think more and more people are looking for something to do with their money, right? And I think even before I get into the details of what Bitcoin is, a question worth considering that is applicable to almost everybody is, how do I ensure that my money lasts over time? Like, I can maintain value over time, or even not even that, like I can save my money effectively, efficiently, without something outside of my control happening to it, right? And I think a couple of examples to consider. Take the Germany, right? The Weimar Republic. I know it's a long time ago, or even you could look at Venezuela today, or a whole bunch of other countries where inflation has really took a toll. If I'm holding, I don't know what the money was called at the time, but let's say I'm in Germany in the 1920s and I have my life savings in that currency at that time, and then all of a sudden hyperinflation occurs and the money that I have in my bank account or whatever just doesn't have the same bang for its buck at all, right? And it was no fault of your own, right? Like, you did the right thing, you worked, you accumulated money, and you saved it up, right? Whether you kept it in a bank or you kept it under your mattress, right? Your thinking, as is with most people, is I'm saving this money for something in the future, right? And I don't know what it is. Maybe it's a big purchase, maybe it's an emergency, whatever the case may be. I am trying to save this money for something. And my intention is that it'll last, that a year from now, 5 years from now, it'll still have the same, I think one of the bang for its buck, essentially, is the idea. You could say purchasing power, that's getting a little bit technical, but essentially the same bang for its buck. I don't want this money to be devalued, let's say. And for most of human history, people would say gold is a good store of value, right? Like, if you had gold, if you held on to gold somehow, some way, maybe you had a brick, maybe you had some coins, maybe you had some jewelry. It was a sign of wealth. It was like, oh, okay, you got a decent amount of cash, and not cash, but you do have a decent amount of wealth, and if something were to happen, or if you wanted to pass that on to your family, they too would have some savings, something that stored value, right, across time. Across time is really the interesting thing to consider there, right? Because again, yeah, I'll kind of stop it there. But anyways, that is the question to consider, right? Like, well, I'm exchanging my time and energy in return for economic energy in the form of currency. And I'm trying to, whatever I don't have to spend, I'm trying to save it for another day, right? Whether that other day be next week, next year, 5 years, 10 years, 20 years, so on and so on. That is essentially the question that all of us have to consider, right? Because I think most of us, if possible, if we can, we try to save money. And so that's something I think about a lot in terms of what this whole money space, and I'll get into it, but why consider Bitcoin in all of this, right? So before that, let me just try to explain what Bitcoin is. Very short and sweet, very rudimentary. Obviously, this topic warrants, hours and weeks, blah, 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 of study and conversation and deep diving. But to do what is Bitcoin, I'm actually just going to read it because I want to get straight. I don't want to mess it up. So Bitcoin is a consensus network that enables a new payment system and a completely digital money. It is the first decentralized peer-to-peer payment network that is powered by its user with no central authority or middlemen. From a user perspective, Bitcoin is pretty much like cash for the internet. Bitcoin can also be seen as the most prominent triple-entry bookkeeping system in existence. So in those couple sentences, a lot of packed a punch, which is really cool. So now this is me talking. The first decentralized peer-to-peer network. So peer-to-peer meaning I can transact with anyone with a Bitcoin wallet or address directly. As I mentioned, no central authority or middleman. Conventionally, if I wanted to send money to somebody else, I need to do it through a third party, whether that third party be something like PayPal or Zelle, which most banks probably have, or Venmo or Cash App, and the list goes on and on and on, right? Usually, if you want to send money to somebody digitally, you need a third party. Excuse me. Versus if I have $20 cash, I can just go hand it to that person. Now, where this gets interesting is if I need to give somebody $1 million or $2 million or even higher than that, well, then it would be a little bit hard to give them that money cash, right? And the reason no central authority or middleman is important, in addition to being able to transact directly, is, well, one of them being fees, right? You got, if I want to send $1 million to some relative I have in Argentina or Vietnam or Mexico, whatever institution I'm doing it through is probably going to charge me a hefty fee. And then on top of that, this is a part that I don't really understand entirely, but there's like this record keeping, this settlement is what people in the finance world probably understand it as, that it takes a long time for these transactions to settle. And so in the process of all of that, there's a lot of room for mishap, let's say, for a lot of error, or whether it be technical error or human error or fraud or some shady business, things like that, right? There's a lot of room for error, let's say, broadly speaking. And that's just a problem with these third parties. Now, the last point that was mentioned here is Bitcoin can be seen as the most prominent triple entry bookkeeping system in existence. Now, what is triple entry bookkeeping? I don't actually know, but I think I can explain it through why Bitcoin is why it doesn't need a central authority or a middleman is essentially it's a software that people can run, and anybody with the right technical equipment can download the software, let's say, and run it on their own computers, their own devices. And on all of these, everybody has access to the same information, right? Essentially, you can think of it as a public ledger, also known as the blockchain. And this ledger, which in accounting is all the transactions that have ever occurred, this public ledger that everybody that runs the Bitcoin software / network they have access to the same information, and you can verify, you can see every transaction that has ever been processed. Now, that's kind of cool because it's essentially full transparency. There's no, like with banks, you can't really see inside on all their transactions, at least not 100%. There are things that are opaque, there are things that are left out. But with Bitcoin, you can see all the Bitcoin that has moved since the beginning of time, where it's gone, what address. And so everything can be verified, essentially, right? And the power of that is, well, what is the power of that? That everything can be verified. You don't need to put trust into another person or another institution, right? So that's one. Number two, if somebody tries to mess with the number of Bitcoin or try to manipulate Bitcoin in some way, they're going to get caught up, right? Because you're going to have 99.99% of all the other people that run the Bitcoin network, that run the software, and say, hey, that's not correct based on what we have here. So somehow, some way, we're going to X you out, or we're going to X that transaction. We're not going to allow it. So that's something interesting to consider. Another thing, interesting thing, again, no central authority, right? And so there's no one person or one group out there that runs Bitcoin, right? It is decentralized, meaning, again, anybody with the right technical equipment can download the Bitcoin software and run it and kind of have access to the public ledger, let's say. And that is really something because with banks, with any other financial institution, even with all the other cryptocurrencies, you have someone or group of people who have control, right? Who have decision-making power over their assets, let's say. And Bitcoin is the only one where there is nobody in charge. And it's really cool because the person who came up with it goes by a pseudonym known as Satoshi Nakamoto. They created the technology, they put it out into the world as a new form of money that people can use to transact with one another, again, peer-to-peer. And pretty much about a year after he released it to the world, has been incognito, has not done anything, has not made him or her public, or maybe if it's a group of people, made themselves public. And they haven't done anything with the original Bitcoin actually mined. So to get the network going, let's say they mined like an initial amount of Bitcoin, and people can verify that that Bitcoin has not moved, right? They haven't tried to sell it, they haven't tried to move it. So it's really something to consider and think about. Like, the person that created the technology could have been, going around doing parades and promoting it and all kinds of stuff, right? But they decided, no, I'm going to create this technology for the world. I'm going to put it out there, and I'm just going to leave it there for people to do what they will with it and see how it goes. So that is essentially a very short, brief explanation on what Bitcoin is. Now, the way that I understand it, the way that I kind of explain it to people is it is a digital gold, right? And it's kind of related to the question I posed earlier is like, well, what do you do with your spare money, right? And again, the reason I say digital gold, and other people will describe it as digital gold, it's not just me, it's not my own idea, but I think it makes sense to people is, well, for most of human history, we understand that if you held on to gold, you held on to value, right? Gold is one of the most precious metals. It's one of the most valuable metals. So if you have it, you're holding on to something that is valuable across time, right? Gold was valuable 1,000 years ago. It's still pretty valuable now. So it's something worth holding on to, right? If I held on to the currency of Germany at the time, well, I'm pretty much holding on to something that is worthless right now, right? If I was rich in Venezuelan dollars 20 years ago, 30 years ago, and I still hold on to all that currency, I'm probably going to be pretty broke right now. It's not going to get me anywhere near as much as it would before. And so why consider Bitcoin, right? So, man, let's see. This is going to be interesting. If you consider it as digital gold, why do we consider it as digital gold? Because one, it is limited. Because it has, there's no central authority, right? So again, if we look at gold, there's no one person that runs gold, the one person or group that owns all the gold in the world. Anybody can go out into the world and find gold and mine gold and produce it, right? If you know where it is or have access to the tools and the supplies. And what else? Why can we say that it is digital gold? It's durable across time, right? So again, given the fact that there's a certain amount of Bitcoin that will ever be in existence, and we know this because the technology can verify it, right? Then the idea is that over time, as more and more people purchase Bitcoin, and even some of it gets lost, right? That's another interesting technical aspect of it. Essentially, by owning Bitcoin, you own a 24, I think in most cases, a 24-word phrase that you can, as long as you remember these 24 words, you know, you have access to your Bitcoin, essentially. And if you don't, then that means somebody else holds on to your Bitcoin, which I'll get into in a second, or your cryptocurrency. But if you have access to this 24-word phrase, you have access to your Bitcoin, right? And why is that important? Well, some people lose this 24-word phrase, and as a result, this Bitcoin will never be touched again, essentially. And if we remember from earlier, the more limited something is, the more valuable it becomes, right? And so, as I mentioned, as more and more people purchase and hold on to Bitcoin, and just from human error and all kinds of stuff, people lose their Bitcoin. There's going to be less and less available to transact with, meaning that if, I don't know, everything goes according to plan, not according to plan, but if this same process is applicable to Bitcoin, then eventually over time, the value of Bitcoin will go up. In the same way that something like gold has gone up, or in the same way that gold is seen as a store of value, right? Like if you hold on to this, there's only a certain amount of gold in the world. Again, I mentioned that it increases a little bit, 1% to 2% per year, but not by that much. If you hold on to gold, you're holding on to something that will either maintain its value or increase its value over time. Same idea with Bitcoin, right? Because again, it is limited versus all the other cryptocurrencies where it's not limited and it's also run by a group of people or someone, right? And so I guess this is in a good place to mention the distinction between Bitcoin and all the other cryptocurrencies out there, right? So Bitcoin is a cryptocurrency, right, by most people's understanding. Now, it's interesting because in today's world, because all of this is still so new, so emerging, so buzzword-ish, you hear cryptocurrency and most people are immediately thinking Ponzi scheme, get-rich-quick scheme, oh, it's all fake, I don't understand it, what is it, blah, 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 right? So Bitcoin kind of gets caught up in all of this this commotion, let's say. But the best way that I understand it, that I've heard it explained to me, shout out to Michael Saylor on this, is that Bitcoin is a commodity and all the other cryptocurrencies are considered securities, meaning they're like stocks, where stocks are run by a group of people. There's somebody in charge. They have a board of directors, board of something, blah, 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 that makes decisions that can change the course of the company, that can change the products and the goods sold, and make decisions, right, that will impact the stock ultimately, versus something like a commodity, gold, steel, corn, land, where there is no central authority on gold exactly, and there's no one person making a decision that can, drastically manipulate or alter gold. And also commodities are, for the most part, the same, right? A gold brick in Japan is the same as a gold brick in the United States, versus a stock in Japan is a lot different, or a company in Japan is a lot different than a company in the United States. And so why make this distinction, right? It's important for people to know, because in terms of regulation, right, if you're going to have a group of people or one person at the helm, at the head of a cryptocurrency, take any of them, for example, Dogecoin, Ethereum, Shiba Inu, there's thousands, right? So the list goes on and on and on. At least in the United States, you have to have disclosures. You have to say exactly, you have to be transparent about what you're doing. How many coins do you produce? How much coins do you have? I don't know the exact details, but essentially you have to have disclosures, right? You need to be upfront and honest about what it is that you're doing with your company or your coins. And so that is where the regulation piece comes in. And for anybody that's in the stocks game, you would know that any company that is a publicly traded company has to have disclosures, right? They have to release like financial statements. I don't know the exact name of these statements or whatever, but I think it's a good way to understand it, right? If you're a publicly traded company, you have to be transparent. You have to release these statements, these documents that kind of show to the regulators, the SEC, anything else, FDIC, that you are legit, that you are doing things ethically and morally, right? Versus something like Bitcoin, where there's no one person making changes, so everybody kind of understands it as the same thing, right? Again, take gold, for example. Most people understand gold to be the same thing. There's no one person making decisions that will alter gold that you have in Japan versus the United States, right? And the SEC themselves has recognized Bitcoin as a commodity. Now, I want to linger on this for a little bit, because it is a big deal in, let's say, the financial space, because the SEC is seen as one of the most influential regulators of the world. Again, the United States kind of being like a trendsetter. The rest of the world moves as the United States does. And so let's I just want to read a couple things. So I just want to read a couple things. So Bitcoin is recognized as a commodity in much the same way gold is, not a security, okay? Now, the SEC has said that many tokens meaning cryptocurrencies, have the key attributes as securities, which means they need to be under the jurisdiction of the SEC. And the SEC, I want to say, stands for Securities and Exchange Commission. Now, because Bitcoin is recognized as a commodity, it would then fall under the oversight of the Commodities Futures Trading Commissions. Now, there are essentially a couple key takeaways from this recognition. Here you go. Bitcoin, because the SEC recognizes Bitcoin as a commodity, it can be referred to as a digital gold. because, like the precious metal gold, it is a medium of exchange, a unit of account, non-sovereign, decentralized, scarce, meaning limited in supply, and a store of value. Now, this is an opinion here, but one of the persons writing about this says, I believe that the world's largest crypto will dethrone gold as the ultimate safe haven asset within a generation, as millennials and younger investors who are so-called digital natives believe it competes better. Another key factor is the historic levels of money printing as central banks around the world attempt to prop up their economies from the fallout of the pandemic. Now, here's where it gets really interesting. If you are flooding the market with extra money, aka printing more money, you are in fact devaluing your currencies and playing a big role in inflation. Now, this is a legitimate concern to a lot of people who are looking for alternatives, right? Again, there are people. What do I do with my extra money? Do I put into stocks? Do I put into real estate? Do I put into gold? Do I put it into silver? Do I put it into Bitcoin? This is a question a lot of people are now confronted with. And we touched upon a lot there, but let's see. Like the way, so Michael Saylor, the way he explained Bitcoin being better than gold, there's a lot of there's probably a whole bunch of reasons, but the best one that I recall is gold is durable across time. It maintains value across time, right? But the one thing that it does is let's say a pitfall or a weakness, let's say, is gold is a little bit hard to move across space. And what do we mean by space? Let's say I have my life savings of $1 million or $100,000 worth of gold, and right now it's, because it's a decent amount. I don't know how much that would actually be in terms of physical gold, but let's boost it up just so we can imagine like a couple bricks, right? Let's say I got like $10 million and that's my life savings in gold, and right now it's held by XYZ Bank in a vault somewhere. And if I want to move this gold, I'm going to have to reach out to my institution. I'm going to have them move this gold to wherever I go next, right? And that's a little bit problematic because, well, they're going to have to transport the gold, and that's probably going to cost some money. Another key part of this, right, the thing that I brought up from the beginning, well, I don't know if I brought it up at the beginning, but it's like, who is this third party? Who is this institution helping you with the transaction, right? And I guess this is a good time to bring up the question of who do you trust to hold your life savings, right? Because even if you do own gold, well, is it you that holds it, or is it a bank or institution that holds it for you under your name, right? Now, here's where Bitcoin comes into play. Bitcoin, given that it is a digital asset, it's not physical. If I have my Bitcoin wallet or my cryptocurrency wallet, let's say, and it pretty much, think of it like as a USB, right? It's rudimentary explanation, but it is, in some cases, if you have like a nano ledger, it looks like a USB, but it is essentially the address on which your Bitcoin, your cryptocurrencies are held. If I wanted to get up and move, whether by volition, whether by my own volition, let's say, or by force, like if I am a political refugee or a war refugee or any other extenuating circumstance where I have to move, well, if I've got my life savings in Bitcoin on this wallet, I could get up and move tomorrow without having to jump through hurdles of reaching out to my bank, acquiring all my assets, transferring my assets to a new institution, so on and so on, right? We're talking about time, effort, bureaucracy, logistical hurdles, fees, that kind of stuff. It's really something to consider. So again, Bitcoin surpasses or is better than gold because you eliminate the need for somebody else helping you with this move, let's say. Again, it's Bitcoin is good across time and space. Gold is good across time, but a little bit harder, a little bit more inconvenient to work with across space, right? It's hard to move, especially if you have a lot of it. The other thing that came up when I was reading from this article about how Bitcoin is seen as a commodity, if you have a situation where your government, your central banks are printing a lot of money, again, I think most people would understand this as devaluing the currency somehow, some way, and this plays a role in inflation. So if you're printing a lot of money, devaluing the currency, you're going to have to pay more for the same goods that you did previously. And I think, especially at this time, most people probably understand this, right? If you're buying eggs, I know eggs has gone up in price astronomically. Really, take anything these days. Eggs, milk, your average groceries, gas. Most things have gone up in value. Most restaurants that you've gone to have increased in price. Now, how much of that can be blamed on the printing of money? I'm not sure you could say 100, but probably a decent amount, right? And even over the past 10 to 15 years, since the 2008 financial crash, I think the United States Central Bank strategy has been to keep interest rates low. And so what has happened over the course of that time? The inflation wasn't in like the consumer goods, it was more so in the assets, right? And this is what I understand from listening to Michael Saylor. The prices of homes have gone up astronomically over the past, since the financial crash. For what reason? Who knows, right? Like, if somebody like an Austrian economist, somebody like Michael Saylor would probably say because, one, you keep the interest rates low, people are going to borrow money. That means more money in circulation, right? More free money available. And so you get prices of homes rise astronomically, or something like the stocks, right? Well, you got a lot of stocks over the past 5, 10, 15 years that have gone up, maybe because these are actually good companies making good money, increasing their value, increasing their market cap, blah, blah, blah. But then you've got a whole bunch of companies that are speculation, right? That are just seen as, well, if we can put a lot of money into this company, inflate the stock price, yes, it'll probably do well in time, right? But then, as I mentioned earlier, in 2022, the value of it went down a lot, right? For a lot of speculative. There's another word that I'm missing here. I can't remember, but essentially, speculative is the right way to think of it, right? I think this company is going to do well. That's what a lot of people say. So we're going to put a lot of money into it, jack up the stock price, only to find out that it's not going to produce revenue, that it is not, the products and services that aren't as good as you thought they would be. So all that to say, money printing is a problem if you see it that way. I think in reality it is, because most people would probably see that as devaluing the currency. And then so you have to ask yourself, well, what am I going to hold on to so that I can beat inflation, essentially? I think that is a good question to ask oneself. And it's the reason people buy stocks for the most part. It's the reason most average consumers buy stocks or buy bonds or buy ETFs, is because they say, well, here's a good way to think about it. Most people would probably understand that keeping their cash, their savings in a savings account is not really doing too much, right? Again, I mentioned earlier that the interest rate is not very favorable, let's say. So by keeping your money in the savings account, yes, it is protecting you from volatility, right? Your $10,000, $100,000, $1 million is not going to change very much day to day, month to month. But over time, the purchasing power of that money, you're gonna be bleeding. You're gonna bleed a slow, maybe not so slow death because of inflation, right? And I think most people understand that. At least the first part, right? Like, yes, keeping your money in a savings account is smart. Having an emergency fund is smart. But then after that, you got to do something with your money to beat inflation, essentially, right? And again, that's why people invest in bonds and real estate and stocks and so on, in gold. Now, the question to consider is, well, are stocks and bonds and real estate the right move? Now, for some people, it probably is, right? If you believe that a certain company is undervalued and it'll increase in value over time, then buying some stocks is probably the right move. Or if you have enough capital for it, then maybe buying real estate is the right move. Now, these are all personal decisions, right? And I think the reason I bring all of this up is again, it's just for consideration, right? Like, really think about, well, what is the right move here? And it's something that I still meditate on a lot. Now, the critique or the downside, let's take stocks, for example. Well, take stocks in real estate and gold. I mean, I already touched upon gold. The gold is limited across space, right? And gold, you have to trust another institution with it. The problem with stocks, or the potential problem with stocks, is, well, you have to ask yourself a couple questions. One, do I believe that this company will be continuing to innovate and thrive for the next 10 to 15, 20 years? Do I believe that whoever is in charge of this company will continue to push the boundaries, will continue to innovate, and not only that, but also act morally and ethically and in good faith, right? And I think a good example of that is FTX, right? A lot of people probably thought this was a top-tier cryptocurrency company. And you saw this because a lot of people took endorsement money, ad money from FTX, celebrities, politicians, other institutions, right? So people had faith in a company like that. They probably, thought, well, FTX seems like a good company. They're doing cool things. They got a lot of money going on. I should probably be all right here. Now, so these are the questions you have to consider. Do I trust this company? Do I trust the people in charge of this company? And then on top of that, well, what happens if there's a sudden change, right? Maybe they don't sell the same products anymore. Maybe they have a change in leadership, right? And so these are the potential downsides of keeping your assets, your capital, your wealth in stocks. Now, I'm sure there's more that I'm kind of missing here, among other things, but let's kind of think of it that way. Now, the downsides of real estate include the following. Well, the way that Michael Saylor explained it, and the best way that I can understand it as well, is like, let's say I own a home or multiple homes in X city. Doesn't matter really where, but let's say next year, whoever the mayor is decides to raise the property tax from 10% to 15% to 20% to 30%. Or let's say the city decides to build a train that runs through your backyard, or builds whatever, a big ass hotel, a big ass golf course, a big ass amusement park across the street from your home, right? A lot of these things are outside of your control. And so, yes, real estate is seen as, I think the one of the strongest pros to real estate is that it is cash generating, right? People have to, if you do rent it out, people have to pay rent. And so that is like a steady income of cash, right? But then again, you're subjected to all these external circumstances that are outside of your control and that can impact your money in some way, somehow. Again, raising the property taxes, I think people that are homeowners probably would understand quite well. And so, again, going back to the question of, well, what am I going to do with my spare money, essentially? Am I going to invest in gold? Am I going to invest in stocks or bonds or real estate? There's no one answer. Everybody's going to come to their own conclusions on this. But I think from what I've heard, Bitcoin is the ultimate. It is, again, something that cannot be manipulated. It is something that, if you do it the right way, you can have full custody over, right? Even gold and stocks, right? Some other institution has, it is your custodian for that money, essentially. If I use Robinhood or Fidelity or Webull or E-Trade, whatever the institution is, if I have a decent amount of money in there, I am trusting these institutions to act ethically, morally, to take care of my money, to give me my money when I need it, to not be weird or not say, well, we can't give you your money because of X, Y, and Z reason, right? And I'll get into this in a second. With the real estate, again, the example is, well, there are situations that could change in your municipality or your city that could alter whatever your home ownership situation looks like, right? And again, I bring all this up is because Bitcoin seems like the superior asset. Why? Because it is, again, something that if you do it the right way, you can have full custody over your money. It does not require another institution. It does not require a bank. And, it's really something to consider, right? Like, I think I posed a question, but it's worth saying one more time. Who do you want to hold your money? I've mentioned this in one of the previous podcasts, but it really is something to meditate on. Who do you want to hold your money, especially when it comes to your life savings, right? Now, most people would probably respond to that with something like, well, I trust these institutions. They, for the most part, operate fine, right? Like, if I need my money, I can take my money out. No problem. I can go to the bank, withdraw cash. I can transfer funds electronically from bank to bank. No problem, right? And I think that is probably true for the most part. But then you run into situations, now I don't have any recent examples, but I think people can easily look this up, where, you run into situations like where a bank will not have the cash that they say they have, or maybe they don't have enough cash on hand, and so you got a people or a person trying to withdraw money and they can't. This bank says, well, sorry, we don't have enough money for you to withdraw your funds at the moment. And I think people in the fiat money, paper money space have experienced this. People definitely in the cryptocurrency space has experienced this, where if you kept your cryptocurrencies on an exchange, and that exchange went bust, well, you're shit out of luck. And that happened with FTX. I know that's happening with a couple other cryptocurrency exchanges where people are trying to withdraw their funds, but the company is like, well, sorry, we don't really have all those funds for you to withdraw, so sorry. And the lack of regulation has kind of screwed over a whole bunch of people. So, pretty problematic, right? And then again, why is Bitcoin superior to stocks and real estate? Well, and gold even, it's the feature that it is easily portable. I think we talked about that earlier, right? Like, it's not easy to walk around with bricks of gold. It's not easy to move stocks from one country to another if you needed to move countries. It's not easy to take your house that you own or whatever land that you own and all of a sudden move it to a different place, right? Bitcoin, you don't need really anything to move. All you need is your digital wallet to get up and move if you have to, without any hurdles, without any logistical hurdles, without any administrative bureaucratic hurdles. And so that is essentially the argument in favor of Bitcoin. Well, more things, right? With the stocks, there's no one person controlling it. There's no group of people that are making decisions that could alter it drastically. You don't need to trust that the owners of Bitcoin, because there are none, act faithfully and morally. And so it's, I'll stop there because I think I'm saying the same thing over and over again. How can I recap? Bitcoin as a safe haven to store your value across time and space is really something to consider over all of the traditional assets that I just described, such as gold, real estate, bonds, and stocks. It's something to consider for all those reasons I just mentioned. Again, who do you trust to hold your money? If you needed to move right away, would you be able to do it without having to go through a whole bunch of processes and fees and all kinds of stuff? Are you protected from cyber attacks, from lack of cash, being able to access your money, right? And again, the ultimate question here is, who do you trust to hold your life savings? Really, like, imagine you've worked your entire life for X amount of money. Who do you want to hold that money? Do you want it to be Bank of America, Chase, Wells Fargo, Credit Union, blah, 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 or yourself? So, or Fidelity or Robinhood or Webull, these stock exchanges or the cryptocurrency exchanges. Something to consider. Not saying what is right. It just seems like to me, again, I could be wrong on all of this, so take that for what it is. Based on what I've heard, based on what I've learned, it seems like Bitcoin, all roads lead to Bitcoin, right? And I already touched upon that. Now, another question that I thought was worth considering is, who has an interest in holding Bitcoin? Now, this is definitely something that's a little bit out of my depth. This whole conversation is a little bit out of my depth. But like I said, shut the hell up, Brian. The purpose of this is to exhaust my knowledge. See, do I really understand what I'm talking about here? And can I convey it in a way that is understood or can be understood by the average person, anybody out there listening to this? So another question that I had written down here, who has an interest in holding Bitcoin? Now, I think there's a couple ways to lay this out. You've got like your average person, right? Like your average person, like, hey man, I'm just trying to save money. How can I do that in a way that I am protected, that I can't get fucked with by a government or a bank or blah, blah, blah. Like, I just want to save my money. I want to store value across time and space and know for certain that it's something that is valuable, that somebody can't just go and produce a million more of and say, boom. And all of a sudden my whatever I'm holding is suddenly devalued, right? It's really something. So you've got the average person, you've got companies, right? You've got companies that have cash reserves that say, hey, well, we don't need to spend this cash right now. What should we do with it, right? That's another something. You've got universities that have endowment funds, I want to say that's what they're called, right? These universities have big pools of money that from their operations, from donations, where they do stuff with it, right? They invest it, usually probably in like some ETFs or some basic bonds, or probably not stocks, but things like that. Bonds, right? ETFs, mutual funds, things that have like reasonable growth, 8%, 10% year over year, so that they can grow this money, that can maintain that pool of money, right? It's kind of like self-sustaining, essentially. So if you got the universities, and these we know have a shit ton of money, and then you've just got all the traditional financial institutions. So you got banks, you've got, banks, let's say. Let's just call it banks, just to keep it simple. And then the last one to consider is countries, right? And this is where it gets really interesting, really spicy, is like most countries besides our adversaries, let's say, probably have their reserve currency, they're probably holding some dollars, right? Now, I don't understand this part of it that well, but I think it's kind of, you can intuit it, right? Like Japan, I know, holds dollars. I'm sure a whole bunch of other of our, allies, collaborators hold dollars as their reserve currency, and they probably have their own. But they hold dollars too because they know that there are some values to dollars. Now, they're holding this money. Why? Because they know that they have faith in it, right? They trust that it's going to maintain its value, that if their currency went to shit for whatever reason, well, they still have some dollars under the bed, in the piggy bank, in the vault, ready to go, just in case, right? Like as an emergency, just in case we got some dollars on hand. And we know that with dollars, we can transact with most countries in the world, right? I think most countries in the world recognize the dollar as valuable, and they want the dollar, and they use the dollar. So that's why they hold it. Now, you ask yourself, what else could all the things that I just mentioned, the banks, the universities, these countries, what else could they allocate some portion of their portfolio to, some portion of their funds, right? Whatever savings those countries have. Well, in addition to the dollar, what else could we do, right? Or I know a lot of countries will invest, or at least like some leaders of companies will invest in like U.S. stocks, right? So they'll invest in like Apple, Google, Amazon, Twitter, blah, blah, blah. The list goes on and on. Or maybe they have some gold as well. Or maybe they have some U.S. bonds, right? And they're all trying to do the same thing. They're all trying to preserve their own wealth and have like a store of value, again, just in case they need it, right? They have extra cash, extra money. They want to do something with it. They're not just going to hold it. And just to provide some numbers here, just because it is really interesting, really relevant, think of these as pools of money. So in the entire world, you've got about $100 trillion in global equities. So my understanding of that is like, of the entire world, all the financial institutions, all the countries, you got about $100 trillion that is being actively invested, let's say, right? Whether that be stocks, bonds, gold, metal, blah, blah, blah. $100 trillion worth of money that people are using not to spend for consumer goods, but to spend to store value. Gold alone has $12 trillion. And then you've got about another $100 trillion in bonds. Now, where does Bitcoin fall into all of this? At the moment, I want to say the market cap for Bitcoin is probably about 400, 500 billion. So of all of that I just mentioned, it's about 215, 212 trillion, let's say. Bitcoin is 400, 500 billion, so that is 0.5%, so it's about 0.5 at the moment, 0.5. Right? Out of all the potential money that could be used for store value, for investment, again, taking into consideration everyone, the universities, the banks, companies, countries, right? Everybody has to do something with their money to try to maintain value. If you just take 5%, now this is where I'm just going to have to speak. I wish I could do the math. Like Michael Saylor is crazy because he could do the math on his head on the spot, but I can't. I'm not that smart, unfortunately. So if you just take like 5%, again, Bitcoin right now represents 0.5% of all the money available. If you just take 5% of all the rest of the stuff, right? 5% of 200 trillion would be what? 10 trillion, right? Dedicated to Bitcoin. That means 5% of all these people's, all these institutions' portfolios dedicated to Bitcoin. That means the market cap of Bitcoin is going up to, right now it's 500 trillion. You take 10 trillion. No, I'm tripping. Bitcoin right now is 500 billion. 5% of 200 trillion is 10 trillion, if I get this correctly. Yes. That means Bitcoin could go from 500 billion to about 10 trillion if 5% of all this money is allocated towards Bitcoin. Now, again, I mentioned before, think of these as pools of money, right? And as more and more people take a little bit of their portion of funds and drop it into the pool of Bitcoin, obviously that is going to get larger and larger and larger. And why is that relevant? One, I think most people can understand that as, well, the value of Bitcoin is going to go up, which is great. I think that obviously people want that to happen. Number two, it's actually related to volatility, which is one of the critiques of Bitcoin, and understandably so. Bitcoin is seen as a very volatile asset, meaning one day it's going to be up 10%, next day it's down 30, next day it's up 50. If you look at the graph, it's like up and down, up and down, up and down. That's what volatility means. But as more and more adoption comes into play, more and people recognize that this is a place where they can store their value, store their cash, well, the volatility should decrease over time. And the reason I bring up pools of money, like think of it as a pool of water. If the pool of water is small and you've got a big jump, right? Somebody either sells it or makes a big purchase, well, then there's going to be a big splash, right? AKA the volatility. But as the pool gets bigger, it becomes harder to make a big splash, essentially, even if you are an institutional investor or a country, right? It's going to take a big leap, big heap of cash, big purchase to make a splash, essentially. And so those are two reasons I bring it up. This whole, like, who has an interest in holding Bitcoin? And the reason I brought up these numbers, again, 100 trillion in global equities, 12 trillion in gold, 100 trillion in bonds, means the potential for Bitcoin is great. Even if all these people with this money are dedicating 1, 2, 3, 4, 5%, and this is like on the downside, right? Even if they dedicate a small percentage of their portfolio to Bitcoin, the upside is tremendous, right? And who knows what the world could offer? Who knows what the world looks like at that point? Again, these countries need a reserve currency. Universities need something to park their cash in and something to maintain value over time and hopefully increase over time. Companies need a place to park their cash. And so, not only does the average person have an interest in holding Bitcoin, so too do these institutions, companies, let's say, countries. I I think I'm gonna wrap up. I'm gonna get close to, yeah, I'm gonna wrap this up. I had a couple more things, but obviously, like mentioned, this, you could go on and on any one of these particular topics. You could deep dive on anything that I mentioned. But the last thing that I'll mention is that Bitcoin has been around for about, 2009 it was released, so that means it's been about 14 years. So still very early in its adoption. And Michael Saylor described it as being like in the embryonic stage. So we're not even walking yet. We're not even multicellular organism. Well, I don't know. Yeah, maybe not even multicellular organism, right? Still very early. And there's a lot of room to grow. There's a lot of technologies to be created on top of the Bitcoin. But I think the reason it's something to consider is because cryptocurrencies are going to be part of the future. Whether you like it or not, whether you're scared of it or not, it's kind of like everything else that we've kind of come across in our time. The internet, cell phones, social media, it's coming. And I mean, one of the most fundamental aspects of life on Earth is the ability to adapt. And I mean, the reason, why do I feel so strongly about this is because money is important to all of us. We work hard for our money. It's our life's blood, essentially. Without it, it's going to be really hard to survive. You need money to provide a roof, to provide food, to do most things in the world. And if you are not diligent and manage your money carefully, it could be, things could get hard, right? And on top of that, the money, understandably, money can get a little bit shady, a little bit weird, right? Stocks and all this stuff. People can see as it's just get rich quick. It's Ponzi schemes. It's all fake. It's all bullshit, blah, blah, blah. And I get it. I do. I understand. But for the first time, I think this is really the most powerful thing about Bitcoin. It's like, it's a money that people, it's trustless. And what does that mean? It's like, you don't need to put trust into any one thing or person or institution, because again, it's something that is fully transparent, that is visible to everybody. So you remove the component of trust. The technology verifies that there's only going to be 21 million Bitcoin ever mined. So there's no one or no thing that can create more, that can manipulate it to benefit themselves, right? And I think if you've lived long enough, if you've studied enough history, if you've seen what happens when you get central banks or governments into play, people's life savings can get shattered because of decisions that a government or a central bank makes, whether it be printing money, whether it be seizing money, whether it be, I mean, that's essentially the ideas. I'm sure there's more to it, but I can't think of it at the moment. So people need a place, a safe place to park their savings, to keep their savings, to do what? To maintain value over time. Say, you know what? I worked hard for this money. This is my lump of cash. This is my lump of wealth that I'm going to hold on for a rainy day. Whatever the reason is, for a rainy day, for my wedding, to purchase a house, to pass on to my children, to my grandchildren, right? I need to know. I need to be not certain, but I need to have confidence that the place that I'm putting my money into is safe, is reliable, is going to be there 5 years from now, 10 years from now, 15 years from now, 20 years from now. And so Bitcoin provides a solution to that. It is not corruptible. It is decentralized. There's no central authority. And that's really something to consider. And so again, cryptocurrencies, broadly speaking, will be a part of the future. That includes all the other ones. And there's so many out there. And although the hard Bitcoiners will say that Bitcoin is the only one to consider, I'm sure at the very least you've got like, I don't know, 5 to 10 other contenders, let's say, that could add value to the world, that could add some intrinsic value, that could have applicability, let's say. And then, of course, you've got a shit ton of the scams that people are just trying to make money. They're just trying to be shady, right? But Bitcoin is at the helm in terms of store of value, even as a means of exchange. One thing that I didn't touch upon is that it's divisible by 8 decimal points in these things called Satoshis. So that's a whole nother piece of it too that could do a deep dive into. But my understanding of it is like, if you have a Bitcoin, I think it's something like 10 million Satoshis. Let me see. I'm just going to Google this. Bitcoin is how many Satoshis? 100 million Satoshis, right? So if you hold one Bitcoin, you have 100 million Satoshis. Consider these like pennies or nickels or quarters, whatever, right? And eventually, what I imagine, this is just my intuition, is that there will come a day where we can transact in Satoshis, right? Your cup of coffee will be like 10 Satoshis. Your going out to dinner will be like 50 Satoshis or 100 Satoshis or 200 Satoshis if you're at a nice restaurant. And if you want to buy a laptop, it'll be like 1,000 or 2,000 Satoshis, right? For example, this is just what I imagine the future to look like. So again, cryptocurrencies are here, and it's messy, right? Right now, because it's a new technology, you're going to get a lot of fraud, a lot of scammers. You're going to get a lot of shit. But as with everything else, you got to do your due diligence. You got to listen to the right people, think for yourself, get your own information, and really confirm, right? And is there going to be a lot of collateral damage along the way? Absolutely. When people first started driving cars, there's probably a lot of weird mishaps. Cars blew up, tires fell off, this went wrong, and so people crashed. It's going to happen, man, with any new technology. I mean, think about the cell phone, right? The cell phone and the smartphone, rather, by allowing social media apps to be on there, we got a whole host of problems that we have to contend with nowadays because of this new technology. Now, are we going to say smartphones are the devil? Well, I don't know if we could say that. An example I always think about is like the hammer. You can use a hammer to build a house, or you can use a hammer to beat somebody to death. Can we make a judgment on the hammer because of that? I don't know. Can we make a judgment on the smartphones? It's brought us the world, essentially. We have access to the world's information at our disposal on this small device. We can reach people across the world and call them up on FaceTime or on the phone and talk. That's really powerful. It's something that's never been done before. So as with any new technology, you're going to have a lot of collateral damage. You're going to have a lot of mishaps. You're going to have a lot of people that are just too scared of it or too closed-minded to speak on it. They're going to say, this is just a big scam. Don't do it, blah, 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 right? Now, you could have that mindset, but I don't know. I don't want to be mean, but you're probably going to get left behind, or you're probably going to miss the train. Now, I could be wrong on all of this, and I think that's an important thing to mention, is that despite all the podcasts and interviews that I've listened to, this could all crash and burn tomorrow, right? But I was talking with my dad about this, and we kind of thought of it like a poker game, right? Eventually, you're gonna have to play your cards. You're gonna have to play your chips. You're gonna have to make a bet on some hand, and we all make that choice. And for now, my hunch, my bets, I'm putting my chips on Bitcoin. Now, how long will it take before that comes to fruition? Who knows? But I think the way I see it, all roads lead to Bitcoin. So I'm going to stop there. If you made it this far, ladies and gentlemen, thank you so much. I hope that wasn't too complicated. At the very least, I hope this encourages you to dive deeper into the topic, to think about what is money, to think about who do you want to hold your money, to think about how you're going to store, how you're going to maintain value over time and space. And those are really the takeaway questions to meditate on. If you want to dive deeper, again, the people that I brought up today in this recording: Michael Saylor, Saifdean, Ammous, and Robert Breedlove. Ladies and gentlemen, thank you if you made it this far. And hope to see you next time.